Hey guys, how you doing? This is Carlos Salgado with Difference Financial. And if you're watching this video, it's because you're a business owner, and we wanted to really in a brief way explain the options that you have as a business owner for yourself, for your company, for your own personal retirement. And I want to briefly go over these things because there's a lot of options that many business owners are not just aware of that they should be taking advantage of. So let me go through this quickly here. So number one is a SEP-IRA. SEP stands for Self-Employment Pension, IRA, Individual Retirement Account. And as a business owner, you can deduct up to 25% of your gross income per year, up to $55,000. Even if you're 1099, okay, if you're just an independent contractor, you can also take advantage of that. So that's a huge tax deduction for you that can save you money on taxes, but it can also simultaneously help fund your retirement. It's a big deal. Number two, you can go traditional with the traditional IRA. If you're under 50, you can put up to $5,500 a year. If you're over 50, you can put up to $6,500 a year. That's a real traditional one, simple to do. Number three is a Roth IRA. Roth IRA, similar to a traditional one, except it's funded with after-tax dollars. So when a traditional IRA, you get the tax deduction. In a Roth IRA, you don't get the tax deduction, but that money comes out 100% tax-free at retirement. Number four, one of my favorites, executive bonus plan. So if you're a business owner who has employees, maybe you have a 401k for your company, maybe you don't. Maybe it doesn't make sense at some points, maybe it's not cost effective. So a executive bonus plan is for you as the business owner to be discriminatory. You can take care of either a handful of key employees who are vital to your company's mission, or maybe it's just one or two people. You can fund a retirement plan, so to speak, for those key people that are tax deductible to the corporation. Now those key people have a retirement plan through the company. It's tax deductible to you. You can even create a vesting schedule where as long as they stay with you for 3, 4, 5+ years, right, that money will belong to them if they stay for that amount of time. So it's a way to retain key talent so they don't go to the competition, and you're also taking care of them while saving the company money because it's a tax write-off. So that's a big one. 5 is key person insurance. Maybe you have a key employee that if something, God forbid, were to happen to that person, it would cause a huge detriment to the financial well-being of your business. Okay, so maybe you need to protect yourself there. You can do that through term insurance or through a permanent life insurance. And there are very distinct differences, so I could explain that to you over a conversation. 6 is a non-qualified IRA. Non-qualified is basically you can put lump sums of cash. Let's say you want to put more than $55,000 a year. I've had people put $100,000, $150,000 into a non-qualified plan, and that money grows tax-free. You will have to pay money on the taxes on that money when you pull it out, but it allows you to put lump sums of cash in a non-qualified IRA. Okay, so there's no limit to that, and it grows tax-deferred. Number 7, buy-sell agreement. It's a big one. Okay, so this is for people that have 50-50 ownership in a company. This could be for multiple owners, but the best way to explain it is, let's say I'm in business with my brother and we're 50-50 owners of XYZ Corporation. Well, if something happens to my brother, right, God forbid that, but what happens to the business? Okay, am I going to deal with his wife if he's married? Maybe I don't want to do that, so a buy-sell agreement allows you to buy the other person out in the event you die. Okay, that's a big deal. I know it sounds very morbid, but it does happen, guys, and a lot of people don't have anything in place. And you can do that also very inexpensively, right? In term insurance and permanent insurance. And again, there's distinct differences to both. And last but not least, what we cover all these plans in is with these 3 strategies in mind. We want to give you tax advantages. We know as a business owner, one of the biggest headaches you deal with every year is Uncle Sam and paying taxes. So our plans are set up to give you tax efficiency so that you can save money, not spend more. We know that, you know, times can be tight, especially when you're building a business. So we want to be able to make sure that you are saving money in taxes. Next thing is principal protection. What that means is with us, if the market goes up, you're going to make money here, but if the market crashes, you never lose a dime. We do index strategies that are tied to the market, say like the S&P 500 index, so you can participate in the growth, but never any of the losses. I know, it sounds too good to be true, right? We can explain that to you. It's absolutely a valuable strategy. And then we want to guarantee lifetime income. So in a sense, we're bringing the pension back. So the plans that you set up with us, if we structure them properly, you're going to get a guaranteed lifetime income stream for the rest of your life or for the rest of your employee's life. How valuable is that to have a lifetime income? What company does that anymore? Most companies don't offer pensions. So now it's possible that you can set up your own pension. So again, this is just a brief overview. If any of these interested you, right, sit down, have a cup of coffee with us. Okay, we do a very no-hassle complimentary consultation for you to make sure that you, your company, your legacy, your retirement is put in place. Thanks for your time, and we hope to spend some time with you. Have a great day.